Good day and welcome back to another podcast. Today we are going to go over a market is upstate New York, Western region in New York, the metro of Buffalo, Niagara Falls and Rochester and Syracuse. That neck of the woods, Western region, New York. We're not going to talk about Syracuse. We're not going to talk about Rochester. They're just neighboring metro to Buffalo. We could talk about more about Buffalo because we know the neighborhood better than anyone else. You guys do. So we could talk about mainly investment opportunities, buying turnkey cash flow properties for Buffalo Turnkey. And my co-host is Caleb Kanazi for Buffalo Turnkey. How are you, Caleb?
Good. How are you?
Thank you for coming on board. You guys are busy doing a lot of deals, selling great cash flow homes to out-of-state investors for years and decades in your market. You have sold a lot of cash flow homes to our investors from California. They have a lot of great experience investing in your area. So without further ado, Caleb, let's go ahead. I got several things to cover. So let's go with Buffalo. New listings are pretty consistent, right? New listings year over year. Then we're talking about medium sales price. Buffalo right now is 260,000. Okay, year to date medium sales price compared to 2021 at the beginning of the pandemic is 205,000. So year over year, the last 4 years, we have 8% increase from medium sales price from 2021 to 2022. Then from 2022 to 2023, another 6% increase in medium sales price. And then from 2023 to 2024, another 7% increase in medium sales price from 205 to 260. So these are very good trend in terms of medium sales price. So what are your thoughts in that with that in the medium sales price, Buffalo?
Yeah, no, the data doesn't lie. Housing values have gone up. And one of the really nice things about the way we sell them, at least, is we sell them a lot of off of cash flow. Even if you didn't get appreciation, you're still getting your cash flow every month. So you're up on appreciation too. And it's not like you are paying taxes on that too. The rents go up as well with appreciation of the value too.
Yeah, you're right, Caleb. In fact, your market over the years working with our investors, you wanted to have the highest cash flow for investors in the country, to my knowledge. Okay. Anyway, so yeah, our investors come to you guys mainly for very high cash flow, good high cap rate, low price point, high rent. But the cherry on top is, as you can see right here, we're getting some consistent appreciation year over year for the past 4 years. So signs are very good. Let's look at the months of supply. Months of supply is 4 to 6 months is a balanced market. It's not a buyer's market. It's not a seller's market. Economics 101, right? If demand is higher than supply, it will put upward pressure on the home prices. If you look at the weeks of supply back in 2021 at the onset of the boom, we only have a little bit like 1.5 months of supply, extremely low inventory and very high demand that caused the home price to increase quite drastically, as we talked about a moment ago. Then in 2022, the weeks of supply 6.9. So that's really not even 2 months of supply. 4 to 6 months is a balanced market. If you're under 4 months, that means there are many more buyers than there are sellers and will put upward pressure on prices. And then as recent as last year, 2023, we have less than 8 weeks of supply inventory. We're talking 2 months supply inventory. There's an extremely low inventory relative to demand. Now, fast forward to November 2024, we still have low supply inventory in the Buffalo, which is very vastly different than many other markets in other part of the country. In some markets in the country, there is a buyer's market. But at 9.2 weeks of supply, we're talking a little bit more than 2 months of inventory. So it's clearly a seller's market. It did drive up demand even as we speak. So we see the uptick. This uptick probably occurred when the mortgage rate were low like 3 months ago, right? Like 6.1%. But now it has gone up to 7%. So I suspect this past few months of this trend is because of lower mortgage rate. Now the mortgage rate has increased. So that should balance out the demand supply equilibrium. Any further thought on this metric before we go to another metric,
Election months are always very weird in real estate sometimes. It goes both ways. People are sometimes not happy with whatever the results. That could also be a little recent bit. But yeah, no, we were just looking at before about the US as a whole on metro areas on Redfin, and that was at 16 weeks, but here it's at 9. So it's
Yep.
considerably less. It's 7 weeks less there supply.
Yep. Agree. Another metric, as you can see right here, is the average sale to list ratio in Buffalo Metro. And this is a very interesting. Many markets in the US compared to Buffalo, the average sale to list ratio was 1.05. That means when a house is listed in the Buffalo metro area, the offer is 4% higher than the original list price. That means, you know what that means, right? That means because of there are more demand than supply, the final sales price is above list price, 4% above, which is a very intriguing metric. People bidding, there's a little bit of a multiple offer, a little bit of a bidding war in this market where home prices sell on average 4% above the original list price. So any quick thought with this unique metric?
Yeah, no, that's a really cool metric. It seems like things are going at least 4.7% above asking. The other thing about us is that we don't do that as much because we're with the properties that we're doing. You're not really bidding against anyone else. We just do the kind of first come, first serve method
Right.
to keep it easier on us.
Of course, you guys have a very unique niche because you are a turnkey provider. You work with investors. Although you do sell owner occupied homes from your off market inventory, but your off market rental properties for investors from out of state, our network you set the price. It is off market. You only target your investment homes for investors that you work with. The network you have, not only our network in California, you work with other investment groups in other part of the country and other part of the world as well. So come in to capture your off market turnkey cash flow properties and all that, right? Am I right?
Yeah, for sure.
Yeah, and you've been doing it and your company been doing it for over 30 years. So to say, to say you have an understanding of your local market, every street, every neighborhood, you buy the property at a low cost. You use your team, a rehab team, to fix up the property, to make it rent ready, to make it rehab the whole thing, place a tenant, and you sell it to out-of-state investors such as our group. So our group will cash flow from day one. More often than not, you have renters in place already. You have a great property management. It's a family business. You've been doing it for so long. You have bought and sold thousands of homes for out-of-state investors, turnkey, like remotely long distance. Our investors are enjoying very high returns on the property they purchase. It's pretty much recap the
Yes, I think that's pretty accurate.
another metric I want to provide to you now that we have finished with the ref. I have another very unique software algorithm. Let's quickly go over this particular metrics. In terms of a home price forecast, according the numeric is like home price forecast for Buffalo for the future. Anytime the metric is 50, 50 is an average market. Anytime it's more than 50, then things are looking good. So if the forecast based on my software, as I'm showing you, that means 58, which is the prices are going up. As you can see, going up. As you can see, it's a seller's market because there are more buyers than sellers in this market. So this software just pretty much validate what we discussed so far. And a couple of other things I want to also discuss. Okay. Again, the home value, this market is so resilient in upstate New York. If you look at a 24-year metric, the home prices, the home value of Buffalo, Niagara Falls consistently goes up, as you can see from the year 2020, very consistent. Even, like you said, this is very interesting. You just said earlier that during the housing crash in 2008, your market, as you can see right now, did not crash. That 2008 to 2010, in fact, your market have gone up slightly during the global financial crisis, 2008 to 2012. It did not go. I don't see any downward trend in market, price reduction, right? It maintained itself, okay? Then after the crash from 2012 on, you have seen consistent appreciation and higher value, even talking today. So what are your thoughts in terms of the last 24 years in the Buffalo metro market?
Buffalo has changed a lot. During the 2008 bubble, Buffalo really didn't see the values go up as a lot of the nation did. But we are definitely seeing that now. Values have appreciated quite the number, as you can see from that chart. And there's no sign that it's going to go down anytime soon. You don't know, especially with there's a lot to talk right now on the news of like inflation too. So real estate is a great hedge against inflation because it's a real tangible asset too that you would own. And as property values go up, rents go up as well.
That's right. It's an inflation hedge. Anyway, so let's briefly talk about the demographics about the Buffalo market. You got to have a good demographics, good population growth, and this metric seems in alignment. We have not any decrease in Buffalo market. Let me see what else we need to look at. A couple more things I want to go over. Let's look at investor metrics. Okay, so look at the rent rate. As investors, we want to see cash flow. We want to see increasing rental rates, and this is an indication. Ever since the last 20-some years, we have steady rental rates increase for the past 20 years. Very consistent. Back in 2005, almost 20 years ago, the average rent is like $687. And now the average rent is like $1,355. If you match the right property for our investors with this average rent, that's why you will see very high positive cash flow in your market at this moment. What are your thoughts on that?
Yeah, that's true. As property values go up, also the rents do, and they generally lag behind a little. Even if the market were to stay stagnant, rents would probably still go up a little bit because it does lag behind, which is obviously going to increase the return on investment.
Yep. And on this particular metric, we're talking about the investor forecast. Again, it's over the score of 50. If I score 54, that tells you that long-term is an average growth market. And from an investor's point of view, long-term similarly, long-term appreciation potential in the market for the foreseeable future, we have a numerical metric of 77, whereby a numerical score of 50 is really above average in terms of long-term appreciation. The number 77 is a reflection of that. So there's a very good sign. And a couple of more things. The cap rate around 5%. It's low. It's higher than that. Your cap rate is on your properties is much higher than on this metric. Let me see what else. I think we cover a lot of things. Migration total is pretty steady. We're not losing population in your market. So it's a very good sign. Some people worry about that. According to this chart, you can see the migration pattern growing ever so slightly. So that tells me there's no mass exodus. People leaving Buffalo is such an affordable market. The challenge we're facing nationwide is the skyrocketing home prices the past 4 years, and the elevated mortgage rate caused a very affordability crisis over the country, right? Buffalo is an undervalued market. It's very affordable. What are your thoughts on that affordability crisis and Buffalo compared to the rest of the country?
I see that as a huge potential in the future, especially if people are going to do more remote work. It makes way more sense to live in a cheaper area and just be able to save a lot more money and have that ability to even just travel with the extra funds.
That's right. Furthermore, this final chart shows that for sale inventory has been very low. This benchmark is a break-even inventory level, right? As you can see, the chart for the past 1, 2, 3, 4, 5 years, the inventory level is below par. Seller's market, there's not enough inventory in the Buffalo, Niagara Falls market to accommodate the demand from prospective buyers, right? It's a very good sign. So that's pretty much I need to cover on that one. At this time, I wanted to go over a couple more metrics. Let's go over this particular chart you provided earlier today from your local media in Buffalo. It says right here, astonishing to see Buffalo ranks number 1 in rent affordability. So Buffalo is the cheapest city for renters. I'm sure you read the article. What is your recap associated with this headline?
The headline is the whole recap. Basically, the study found exactly that it ranks number 1 in affordability, and a lot of people were surprised to find that. But it's a really good city to rent in, and there are a large number of people who decide to rent here, even though the prices are pretty low of properties, which is great as a landlord, because if you got more renters, people who are looking to rent, then you can increase your price there.
I agree. That's why our investment group that we love to buy in Buffalo, because the prices are very low. You guys do a great job of rehabbing the property. Although they are very old, you have a good foundation. Your rehab team is great. You sell it to investors at a very reasonable price, and the rent is high. People can afford to rent the houses that you're selling to investors. As a result, it's a win situation for everybody, for the renter, for the investor, and for the whole community of Buffalo as well. Yeah, so it's a good sign. This article is very good. And then a lot of people doesn't realize that. So it bears repeating. Okay, in 24, at the beginning of 2024, Zillow conducted a study for the top 10 housing markets of 2024, which is going to shock a lot of people. Not you and I, we already know that. Buffalo is ranked number 1. So when this survey came out at the beginning of 2024, were you not surprised about it?
Yeah, I was definitely surprised to see it at first. Not like hugely surprised, because like I was just more surprised that Zillow recognized it like as such. We know the market is good here, but like Zillow could conduct a study across like a bunch of other cities too, to show like, hey, this is our prediction. We think Buffalo is where you should buy.
A lot of metrics, not just Zillow, not just Redfin. A lot of surveys indicates that the upstate New York, the Western New York have is robust. Have a good population growth. They have good job stability, economic engine, everything else, and it's going to do well. It's sort of it's under a lot of people's radar, but for people to watch our presentation, it's not under the radar. It's a very robust market, especially cash flow. One last thing, for the remaining 5 minutes, we can go over a couple of highlights of investment properties you're promoting. I know you guys on any weekly basis do a great job. You know the market very well, 30 years, all the neighborhoods, which is a good neighborhood, which is not which properties cash flow and all that. You have a lot of inventory listings off market, not in a multiple listing service. This is your own portfolio. Investors we come to you, we pick and choose which property we want to buy as an investment home, cash flow, long-term appreciation, the whole 9 yards. So I have identified 2 properties that I want you to briefly go over, okay? And briefly, if anybody want to know more details about it, they contact myself, then I'll put them in touch with you so they could potentially take action through you guys so they can increase their real estate portfolio for financial independence. So with that in mind, this first property is just fresh, come off your new listings. This property is single family home. This is the location. It's all rehab. No, I believe it's rented. Correct me if I'm wrong. Single family home, very nicely done rehab in this neighborhood, this property, this location. You know, you do this kind of an analysis, every property in your portfolio every single day. So this property, what, 96,000 single family home. Investors put 20% down payment, which is total 20 grand up front. Even if they pay 7.3% mortgage rate, whatever, it doesn't matter because it rents for $1,200. One metric that people need to understand, which is mind-boggling, is the rent to price ratio. The rent to value ratio is already 1.2. Anytime you get a 1% rent to value or rent to price ratio, you know it's a cash flow market, regardless of down payment, right? To exceed the 1% metric at 1.2, this is very attractive in terms of numbers and the cap rate. Almost 10%. Look at the cash on cash return, almost 12%. You can learn, people watching my video, they can learn about numerical formulas on other videos that I have. Don't worry about that. Total investment first year, at the end of the first year is 25% because I factored in 3% appreciation and all that. So annual net cash flow plus first year appreciation at the end of the first year, plus some tax benefit divided by your total down payment of only $26,800, including closing costs, equals total return on investment of 25%. What a bargain. What a great value. So tell me from a high level, what's so attractive about this particular listing as of today?
Yeah, this one is already rented. It is that $1,200 mark. and it's above that 1% rule. It should be a pretty solid property. Not a whole lot of work. We didn't do that full rehab to this one, but I think we still need to do the gutters. It's the only thing left on that one because, as you mentioned, it's a new one. It should be a pretty solid property. People are always welcome to get property inspections. I always encourage people to do that, especially if you're not local. If you're local, you can do what you want, but at least get someone's eyes on it. They'll take photos, send it to you, send a report. I like that idea. Not everyone gets it, but when people do that, they'll be able to find some little things. Needs an outlet cover or something. I don't know. But something basic, and we'll just take care of it as far as our price, because it's very easy for us to do that kind of maintenance. But yeah, no, it should be a pretty solid property, especially for the price.
You guys have done a great job with all the customer service. You guys do a great job rehabbing. Investors will go through an inspection report. They will go do an appraisal. They will get a loan. You can get a loan on this kind of properties. It always appraises correctly. This is real stuff. This kind of deals are amazing. Forget about fix and flip, BRRR, buy, refinance, repeat, and whatever those strategies. It's not going to be good as buying turnkey, ready to go for my very reputable turnkey providers such as the Buffalo Turnkey. One more listing I want to go over in today's highlight, this week's highlight, is another property, 51 Mansion in Buffalo. This is a triplex. This is a 3-unit, pretty large square footage, almost 2,700 square foot on this 3-unit. Initial market value, go figure. Where else in the country can you buy a good quality rehab turnkey property done correctly, rented, cash flow on day one? I assume the renters are in there. You tell me momentarily, but a triplex for $156K. This is too good to be true, but it is true. Okay, this is real stuff. You put 25% down payment, even with a 7.3% mortgage rate, your total down payment is only less than 40 grand, including closing costs. The 3 doors rent for almost $2,000 total for the 3-door, 3 units. You minus 3% vacancy, 3% appreciation, and 5% maintenance, and you still cash flow at the end of the day each month, positive cash flow of $324 monthly cash flow. Rent to price ratio 1.2, way above 1% rule, which is amazing. You can't find that anywhere else in the country, in my estimation. Cap rate 8.7%, way above the benchmark. Cash and cash return above 9%, way above the traditional benchmark. Total return investment 22%, including 3% appreciation. Tell me about this particular triplex. Any unique characteristics with this listing?
I actually like that property a lot. It's pretty nice inside and out. So there's an upper and there's a lower front and a lower rear. All the tenants pay really well there and very consistent. It's a nice property. I'm actually surprised it hasn't sold yet. But the one thing about the property is that keeps that capitalization lower than it sounds like it should be is the taxes. The taxes in that area, it's loan, is a little bit higher than some other areas. And that's what keeps the return a little bit less than some other properties. But as far as the house itself and the area, it's nice. It's a solid one. I like it.
Yeah, we only cover 2 of the listings. Every week, your off-market turnkey listings will get updated. There are more. You're selling single-family home, duplex, triplex, fourplex. A lot of it is like 200K, 250K fourplexes, which is amazing value. Single-family home anywhere from 50K to 70K. A duplex anywhere from like 100K to 150,000. Triplex 156K in this case, and fourplex, it all depends, like 250, 300K. It just number is just mind-boggling, but still a good market. Older homes, and yet we have a long-term value. All the metrics, we have all the supporting data, all the objective data I just shared through my own software, through Zillow. Everybody's validating. Don't take it from us, right? Look at the supporting data. Do your research. Look at the economic trend. Look at the data. We just show you as thoroughly as possible. You guys are both the turnkey. Once again, you specialize in selling these off-market properties within your portfolio. You own this massive portfolio. You have like 20, 30, 40 listings in any given week, and they get sold very quickly from out-of-state investors. You got family business, very credible, very honest. You guys got the whole team on the ground. People will do everything for everybody. We become a remote, easy, long-distance investors. We let your group, your property management to take care or collect the rent, do eviction, do rehabs over many years. We just sit tight, earn our cash flow, earn our appreciation, get the tax benefit, and create our portfolio to achieve financial independence for us. Thank you for working with us for all these years. Caleb, any final thoughts you have about investors out there who are still on the fence?
You got to make your money work for you. It's an excellent way to make your money work for you. When you're getting a loan with the bank, it's not only making your money work for you, it's making the bank's money work for you as well. So you're reaping the benefits there. I think it's an excellent decision. We try to make it as easy as possible on people, especially with like the management and everything. We want to I know everyone's busy. You can't do everything yourself. A lot of times we try to make it as passive of an investment as possible for our investors and just make it a real easy decision, like a no-brainer.
Your track record, Buffalo Turnkey, speaks for itself. That's why we have so many investors coming to you over the years consistently, because you guys perform, you guys say what you say, do what you do. You guys are very honest, very respectable, have a great track record. You guys are family business, been around for 30-something years. You know the neighborhood, you know what properties to promote, and the whole 9 yards. Thank you so much, Mr. Caleb Kanazi. Thank you. Thank everyone for watching. We'll see you next time. Have a nice day. Bye-bye.